Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion, your favorite trading show every Monday and Thursday with Trade the Chain and Market Rebellion. My name is Nick Mancini, the Senior Research Analyst for Trade the Chain, joined by CJ and Monty, both Senior Research Analysts over at Market Rebellion. And we are here to break down everything going on in crypto, equities, and pretty much everything in and around those worlds. We have FOMC this Wednesday, which is the third FOMC of the year. I believe there's a total of 8. So everybody is really focused on this. Will we get another rate hike, or interest rate hike, I should say? Will the Fed keep it flat? What's the indication from Jerome Powell? Are they thinking higher for longer? How many more rate hikes are they thinking about? A lot of this information we will get on Wednesday, both from the rate hike itself as well as the subsequent press conference from Jerome Powell. And we all know, just to preface, the immediate volatility always comes in during the interest rate hike announcements, but the momentum sets itself and continues during his speech, Jerome Powell's speech, I should say. So we could see bearishness to start and then bullishness, afterwards. It really depends on the 1-2 punch of the rate hike announcement, as well as obviously the speech. So we're going to go ahead and dig into that. But just to cover what happened while we were away, PCE, as we talked about a lot, came in lower year over year, 4.2% compared to 5.1%, which is why we saw, I think, some euphoria from the equity side of things. We saw a lot of volatility from crypto, but the big issue is that core, it was higher than expected, although it is lower on a year-over-year perspective, 4.6% versus 4.7% the month prior. It did come in a bit higher than expected, which is certainly not what the market and the Fed want to see. But the good thing is obviously it is coming down, which is why I think equities have not completely rolled over yet and are still fighting the good fight as we head into FOMC. Very excited to see and hear what CJ has to think on that. But the big number, or the big data point this week, is obviously the interest rate hike announcement on Wednesday that will come at 2 p.m. Eastern, and then the press conference always comes 30 minutes afterwards at 2:30 p.m. Eastern. So again, rate hike volatility immediately at 2 p.m., but the momentum could shift, may shift, and will be set, during his press conference. So the one thing I want to preface just before we get into CJ and Monty's analysis is the fact that there was a prank call last week. Somehow some Russian pranksters got a hold of Jerome Powell posing as Vladimir Zelensky from Ukraine. And if you actually listen to it, you could tell Jerome Powell was certainly like, this doesn't sound like a normal, conversation with Zelensky, but it was confirmed to be real. Bloomberg reported it, BBC reported it, Reuters reported it. So it did happen, but we haven't seen a whole lot of chatter around this. And Jerome Powell in the crank call said to expect 2 more rate hikes and likely, higher rates, higher for longer, which implies, 2023 at the terminal rate. So, the market has not priced this in yet, but I think the indication that we've been seeing from crypto, which is typically kind of a lead risk indicator, is things have been selling off. And I believe they've been selling off in anticipation for another 25 basis point rate hike on Wednesday. And I believe that would likely be bearish for the markets, as most rate hike announcements have been bearish in recent memory, and for most of 2022 as well. So I'll go ahead and pause it there, because we're obviously kind of getting into our general feelings for the market heading into the week, but really want to hear what CJ has to offer from the equities as well as the crypto side. I know he's been focusing a little bit more on equities than crypto, but I think perfect segue here is, what are you looking at, CJ?
Thanks, Nick. That was really great. I just want to present some of the data that we've seen in terms of positioning over the last week. So taking a look, just seeing equities basically green across the board in terms of some of the major indices, despite the dollar actually being up and gold down. So that's been kind of an interesting relationship we'll watch. But starting off with the most basic stuff here in ES, we still are seeing a lot of shorts stack up from last week. So people are still shorting ahead of the FOMC meeting and being generally very bearish. You can see a lot more shorts stacking up. So the contrarian play to me, at least for ES, is still to be long the stock market. We talked about getting long in our community, last week a little bit after the pullback. And the main reason for that was because we finally saw equity put call ratios spike to levels that typically indicate panic or local bottoms that we've seen like here and here, for instance. So it took some risk there. And I'm not saying buy ES if you're flat right now, but I will remain long despite kind of volatility in the interim going into FOMC. I don't really have an opinion on whether it could be bearish or bullish, but I'm just going to kind of hold through with various stops. So that's mainly my first position. NASDAQ, if we're looking at positioning, we continue to go to like neutral levels. So not a whole lot of edge there for me in this kind of methodology. And it's also interesting to see that, ES is slightly outperforming NASDAQ, despite NASDAQ kind of being the higher beta of the two. I think it's indicative of more shorts in ES. Very similar thing in Dow. We're seeing shorts stack up there, even more so than last week, and nothing really that exciting in the Russell. But overall, in terms of equities, net shorts continue to grow within large speculators. We talked about gold and this short, and had been stopped out of this short probably 2 times for 70 basis point losses. But I still remain short gold here. Went again yesterday night and shorted it kind of on the opening because we still see a lot of shorts overall. And that trade, look, if it comes down in 1 week or 3 weeks or 3 months, that's obviously a difficult question to answer. But looking at the Google search trends of seeing how to buy gold and everybody talking about gold and the demise of the dollar, it still makes me a bit cynical and thinking that this trade will eventually come down. But I really like the technicals, so I remain short gold. If we look at dollar, very similar thing. I don't even doubt that dollar could go below 100 later on in the year. But first, I think it has to squeeze or has a high probability of squeezing. And we're seeing just more and more shorts stack up in the dollar, kind of similar to ES. British pound, we look for confluence within these currencies. British pound is showing, a lot of retail longs and just overall is setting up for a short trade. I didn't short the British pound personally, but I do think that is an interesting trade. I went ahead and shorted the Swiss franc with, a stop loss at the most recent highs, but technically I think this is lining up for a good short. I also like the commercial movement index hitting that negative 40 level. It's an indication of commercial selling, and basically speculator buying towards the top. Now, wrapping things up, soybeans is starting to get to an area of interest for me. I did take a very small starter position in this one just because I like the defined risk. Also, I got my bullish fractal yesterday. So that's a nice place of defined risk where you can take a shot, or where I like to take a shot. And another technical reason why I like that is because you have the bullish divergence within the RSI and within momentum in the MACD, and a lot of shorts riding this trend. So overall, those are the trades that I'm primarily looking at. In terms of crypto, I don't want to go into it a whole lot just yet because I think we're going to have a lot to discuss. But I do like TFX as a short. I think there's probably a 50-50 chance that the top is in with Bitcoin. We might have one more short squeeze to go here, but we'll see. Ultimately, I think the best trade in crypto over the next 3 months is likely just going to be short certain assets versus their BTC pair. So we talked about this a little bit last week, but CFX Bitcoin is one instance that I think would be interesting. But overall, 1x or 2x short, wouldn't really look to go much about over that. But those are my open positions and what I'm looking at generally right now. Let me know if you guys have any questions or just anything else you'd like to bring to the discussion. But that's all I've got in terms of positioning to start.
Yeah,
Well, it
that was
sounds like
fantastic, CJ. Or yeah, CJ, not Monty. Correct. I was correct there. Let me go ahead and get all of our faces back on here. There we go. So, it sounds like CJ, and we've seen this a bit in the markets recently, and this divergence happening between equity, well, at least American equities and crypto. I don't want to call it a full divergence because general momentum and direction is typically the same, but crypto has definitely recently been selling off, and equities have been, S&P, futures specifically have been approaching that critical 4,200 level. So it sounds like even though crypto is seemingly risk off, you're not kind of taking that as a signal that general risk is starting to go risk off, both equities and crypto. You're kind of thinking that crypto is not going to be in vogue, maybe due to the banking crisis, kind of rolling over, as JP Diamond said. But it seems like your feelings are equities have a much better narrative and structure here than crypto does. Is that kind of correct, or are you just mainly focusing on equities because that's just your trading strategy?
Yeah, 100%. Like I have to follow my trading strategy for the ES trade, but I think you're seeing really interesting stuff like in the dollar. It's very seldom that we see the dollar going up as well as like risk on currencies. That's obviously why that's why like gold and Bitcoin's down. But Bitcoin is like worrying me a lot in this particular point in time because like by all metrics, it should be up. Like look at Nikkei, Kospi, HSI, ES. Like all of these have been pretty risk on in the past couple of days, and really Bitcoin's just put in a lower high, its first lower high after a 90% rally basically from the lows. So I think there's reason to be a little bit cautious, but overall, I think that the story in equities is, you're still seeing more shorts, and people like that's a very popular idea, very popular trade, and I don't know if the market's really going to top until people give up on shorting it. This is what we saw during the top in 2021, as well as in 2000 during that top. So, until shorts go back to a more neutral level, I think we could go up to like 4,300 in the S&P. And the most important thing to do in trading, well, there's a lot of important things to do, but one of the most important things is to let your winners ride. That's basically just what I'm trying to do with ES, but it's definitely tough to jump into a long right here. So, like I would wait till the end of the week if I was flat.
Yeah, and I think the one thing that's kind of worrying me, and oops, I'm on the wrong chart here. Let me get to the right one. I got so many screens going. Is this, talking about the highs, Bitcoin obviously, definitely making a lower high, as we can see here, higher high. Here's your lower high for those, people who are still learning market structure. But, I'm seeing the possibility for equal highs for S&P 500 futures. And I'll just go ahead and make it a little bit more clear here. But obviously, let's say 25 basis point hike comes in and we do something like this. Will that change your opinion? Just as, purely academical here, this is not my prediction, although I do feel that we'll probably see a few red candles on the FOMC date, but just, for the academic purpose on, you are leaning towards bullish, but obviously not a good idea to enter longs here. But what would kind of change your opinion? Is there a certain level on the S&P 500 or NASDAQ that kind of makes you worry in terms of the bullish momentum?
Yeah, I mean, first and foremost, I try very hard not to have an opinion, or at least my opinion not to affect my trading decisions. I'd raise my stop to break even on this particular trade. So if FOMC is bearish, then I'll just get stopped out and, I won't lose any. But like something that I've looked at very carefully, which is the primary reason of getting long last week, aside from just positioning being mega short in terms of large specs, was the equity put call ratio. You saw it spiking to levels which have created comparable local bottoms, like what we saw, in those two previous local bottoms. So I think that will happen. I don't know. Everybody is betting on a crash, it still feels like. So I don't know. I mean, it wouldn't change my bias. I would just get stopped out, really. And then I'd have to reevaluate. So hopefully that is.
Yeah. And of course, just want to go over all the different types of ideas on the call, so not against your trade at all. Just want to say, if Y happens, what happens to Z. So, but let's go ahead and move over to Monty, because I know he's got some crypto focused stuff that also borders with equities, and then we'll go ahead and get into some coin specific. We'll go over Bitcoin, Ethereum, and then a few thoughts, around FOMC and some historical indexing. So I'll go ahead and bring Monty's stuff up. So go ahead and take it away.
Yeah, I'm going to go ahead and play a little bit of devil's advocate today, it seems, because it looks like you two are leaning a bit bearish for Bitcoin. And I think that's understandable, right? Before I get to the Nikkei, I'll get to it. I think CJ made a good point. Bitcoin is kind of, it's pulling back hard today during a day where we have the Qs up, where we have, the Nikkei looking strong, as you just saw. All of these are things that you'd want to see from a risk on perspective that typically would have Bitcoin going higher. Now, what I think the cause for this candle is, and what, you don't even really need to think. We can check the data. But you can see that there was some over exuberance from the longs, most definitely. So some people piled in longs, almost $100 million worth of longs were squeezed out of the market and drove us down short to, about 28K. And that's not surprising, right? You see those longs stack up because people see the Qs, the NASDAQ getting above critical levels, and they think, okay, it's time to get long Bitcoin, but ultimately they get squeezed out. Now that those longs have been squeezed out, funding rates have kind of, returned somewhat to neutral. But essentially, we have, like I said, the Qs breaking above a critical level, and with basically little to no resistance all the way up until like 333, where we peaked at our previous swing high. I think that's a plausible target, and I think it could continue to happen. Like CJ said, traders are still short the Qs, and as long as we still have traders positioned short, we can still melt up. And then, of course, we've talked a lot about what's going on over here. But if we look at some of the Asian indices, I mean, these things are ripping. The Kospi isn't trading today, but the Nikkei, is looking very strong. If we just take a look at its top 225 assets, you can see here, this thing is ripping to the upside, and that's what you want to see for positive price action in Bitcoin. So to see Bitcoin down 3.5% today may have you scratching your head, but what I think happened is traders got off sides. They got liquidated. Over the last 24 hours, we've seen about $130 million in liquidations, mostly longs. And I think that, traders are just off sides. It happens. Now, coming into FOMC, I think is going to be very interesting, and what traders decide to do with Bitcoin now. Because now we're falling pretty hard. We got building bearish volume. We have what is typically a bearish catalyst being FOMC, yet we still have the Eastern indices ripping to the upside. So I think that sets up a very interesting scenario for a short squeeze. And CJ and I always joke in our community that shorting Bitcoin is like sacrilegious. If you're going to short something, short an altcoin. There is no shortage of absolute garbage out there that you can short to basically zero. But Bitcoin is not one of those. But what I think could plausibly happen is traders taking on a negative position as we head into FOMC, expecting that negative price action that we typically get. But the Eastern indices, things like the Nikkei and the Kospi, continue to make new highs, and thus those shorts get squeezed out, kind of providing rocket fuel, and people pile in. I would not be surprised at all to see after this leverage flush out, maybe a little bit more of a pullback to about 27.5. We've seen really nice supply absorption there all throughout basically the middle of March until now. We've seen this level act as support. I don't think that's going to change. And if people try and short into this level, watch for a big bounce to the upside, something like this, where we get the short squeezed out and we move higher, perhaps even breaking above 30.5 into the 32K range. I don't think that's out of the realm of possibility. This candle is ugly, and it is discouraging in the context of the greater scheme of things, in the sense that, we have the Nikkei performing well, we have the Qs performing well. So you'd expect Bitcoin to be risk on, right? But we're not quite getting that today. So, I think if we wait until Wednesday, traders will pile in, we'll get lots of shorts, they'll get squeezed out, and price will go higher. That's kind of my expectation for the week. And, we'll see how it plays out. A lot of that depends on equity markets as well. Kospi isn't trading today. It'll be trading again tomorrow. Once it is, I'll be interested to see what sort of price action we get from the Korean market, because of course that is very important. But from the US market, clearly there's still very negative sentiment for BTC.
Yeah, I will say that if you could pull up the Kospi really quick, because this has been kind of a commonality on a lot of our conversations, but it did have, what looked to be a bullish bounce, and then kind of really sold that off relatively quickly. But it still doesn't look completely bearish to me. It's just a fascinating, combination of candles right there with the nice swing failure pattern, and then like a bearish daily almost. But it's in a very nice bounce, all things considered, which certainly, although and I'll be honest, I'm bearish going into FOMC, because I think we will end up being lower than where we are now after the FOMC meeting. But I do agree with the fact that, so much, like all of the other indices have been looking bullish. Inflation has been decreasing. There's still a lot of money on the sidelines, and yield is gonna get grabbed by smart money in some way, shape, or form. So I mean, that's still the bullish stuff. But the other thing on the side of my brain is we've seen some really ugly FOMC or post FOMC price action, and a lot of it has been around all that the most ugly price action has always been around inflation woes and some other macro scenario going on. And right now we have banking, we have inflation, we have Ukraine war, and we have obviously FOMC coming up. So we have a little bit more in the category of pushing us lower. But we've already, on the other hand, every time we sell off into a big data print, it's typically a reversal sooner rather than later. And that's, but then on the other side of my coin, the third side, if that's even a real thing, is the fact that equities have been rising into FOMC. You know what I'm saying? So I'm like, there's so many things. I'm like, okay, this is kind of bullish, but this looks bearish over here, but that's actually kind of bullish. So I've got so many thoughts in my head that I'm unable to really separate them. So it sounds like you're separating those thoughts pretty well. And what is it about, bullishness from equities that's really making you consider crypto may follow suit?
Yeah. One reason why I feel that way is because we've seen this in the past, where I'll get back to this in a second, but one thing we've seen in the past is like crypto playing catch up, right? We've had instances where there's been fundamentally bad news, like with FTX crashing and FTX, becoming insolvent, and the woes that came with that. Bitcoin looked like it was set to follow the cues out of this bottoming formation here. We ultimately didn't get that because of Mr. Bankman-Fried, so you can thank him for that. But this time around, I'm seeing positive price action from the cues, and like CJ pointed out, as long as traders are still trying to short this market, we could still plausibly continue to melt upwards. And I don't think that's out of the realm of possibility. Last week, we had a lot of big earnings reports. And that's what led to these positive candles. I think we could definitely see some continuation, although looking at what we're seeing here, we kind of have a little bit of a doji candle at the top of this trend here, saying that we could plausibly get a reversal. I want to basically just see tomorrow continuation into FOMC for the Qs. I think that would bode well for Bitcoin, but just because Bitcoin's down today and everything else from a risk on perspective is up, I'm not ready to call it quits on any Bitcoin longs yet. That being said, I'm not in any, but if we do start to get some negative price action leading into FOMC, traders get short. That doesn't matter for Japan or Korea. Those indices continue to run and they squeeze out those shorts. That's something we've seen in the past many, many times. It's kind of a trend that's emerged in many instances of negative US equity action and positive Eastern equity action. When you have that mix, you get traders here shorting Bitcoin, traders there longing Bitcoin, and it's pretty easy to squeeze out shorts if you have the capital, and they certainly do over there. And I think that is a plausible scenario. So, and last thing I'll say before I pass back, if you're wondering why I talk about the Kospi so much, I mean, Nick, you had pointed this out as well. We talked about this not only on the show but also on Twitter. But like, it's such a tight correlation between the Kospi and ETH related.
The ETH correlation's crazy. Yeah, it's way more close. It's a lot closer than Bitcoin.
Yeah, the correlation is actually, I believe, 0.89, which is one of the higher correlations between any indice and any crypto out there. And I find that really interesting. So if you're trading ETH, you need to be watching the Kospi. And if you're watching the Kospi, what you need to be watching is Samsung. Because Samsung Electronics makes up a majority, or not a majority, makes up nearly 25. Samsung and SK together make up nearly 25% of the Kospi. So seeing this bullish structure for Samsung, like, to me, it looks like Samsung could hit the target of 6,700. Continue putting in these higher highs. That does not look out of the realm of possibility. It has earnings behind it, responded positively despite having negative earnings, but it had positive revenue. Price spiked, saw a little bit of sell-off at the end of the day, but I'm very curious to see how this reacts when it sells trading. So the world is just one big pool of capital. And I watched Samsung first, then I watched the Kospi, then I watched ETH, then I watched the ETH-related altcoins. It all flows in that manner. And if you can understand like what to watch first, then you'll understand where down the chain, you might have some opportunity. And I think that looking at these Eastern indices, looking at the assets that are particularly important in those baskets, like Samsung, can give you a good hint at where ETH may be headed. So, yeah, that's quite a bit, but that's
fascinating correlation there. I mean, if you're watching, you're not going to, I watch a lot of content and talk to a lot of traders. And I mentioned this after Monty mentioned it to me. And nobody's watching, the Asian correlations, just in general. It seems like the Kospi is clearly the closest, but, Monty just named off a few different ways to track it. So I've been enthralled by it, as I know many in my network have. So I hope, all of you are watching closely as well. And not even, on the daily perspective as well. It's not going to be, of course, it's only a 0.9 correlation. And, if you go down to the hourly, it's probably, if, Kospi is going up, Bitcoin's probably, or ETH are probably going to follow immediately. But if you're tracking daily, 4-hour, 12-hour for general momentum, it's probably going to help more so than hurt. So bringing it back into, the crypto realm a little bit more, I want to discuss, because I think everybody's, right now we've obviously been selling off. If you missed the shorts over the weekend because you were taking a break and hanging out with your family, you're probably feeling a little bit of FOMO right now. And you're like, oh my gosh, I just missed out on 2, 3, 4, 5% of short opportunity. So what do I look for this week? Now, there's a couple of things that I want to, notate that I noticed from historical price action that I think it has the chance to repeat itself today. But I know also Monty and CJ have a few ideas in terms of how we may react, around FOMC, depending on a rate hike or lack thereof. So in my assumption on Wednesday, I'm expecting a 25 basis point hike just based on the information we've been telegraphed. Inflation's not dropping like a rock. Obviously, banking woes are still upon us. And of course the crank call where Jerome Powell pretty much admitted that, there's going to be at least 1 or 2 more rate hikes. So I'm assuming there's going to be another rate hike on Wednesday. It seems like that is the best case. Now, the closest price action to today is actually the Sunday, the 16th. So we actually sold off that entire Sunday. We then formed a swing failure pattern on Monday, and we rose higher into Monday before selling off very early on Wednesday, pretty much throughout the entire week and before weekend consolidation and a repump. So we obviously had a bit of a swing failure pattern, at the recent highs, very similarly to what we had on the 16th. We then sold off to support, which on the 16th, it was 29.3. Here it is 28 flat, both critical levels in the grander scheme of things. And now we are obviously in the precipice where I think, many would expect longs, and we're seeing a lot of shorts come in. So I believe and CJ, correct me if I'm wrong, but I believe OI rose, several percentage points on the most recent drop. And that we're obviously looking at 4 hours. So let's look at it a little bit closer. So over the past several hours, I'm pretty sure OI actually increased on this drop, which means people are continually adding shorts. So if you're continually adding shorts into pretty strong support, what you'd expect is a nice little rise as everybody's trying to doom short below 28K. So, was I just charting that entire thing without my chart up?
Yeah, you were.
Oh my gosh. I am so sorry, everybody.
No, you're good. I was doing my best to
I'll just re-go over it because I'm sure everybody was listening. But what I was talking about is this was last Sunday.
Wait, no. You're still. Oh wait, hold on.
I
still think it's my screen.
This is now it's my screen. Good call.
Okay, yeah, there we go.
I'm sorry, everybody. We're gonna call this, the Monday.
Yes, it's Monday, people.
It's just Monday. And clearly I didn't short as much as I wanted to, so my brain is elsewhere. Okay, so fully restart. Apologies to everybody, but what I was trying to explain is that Sunday the 16th, very similar price action to today. You both basically sell-offs for all of Sunday, and then what could possibly be a swing failure pattern into Monday. So we don't have a swing failure pattern today, but we are obviously wicking quite hard at 28K supports and had, I guess some semblance of a potential swing failure pattern into support. So I think, my early indication this morning before we got even more candles and more open interest added to the books is that we would likely, boost off of this, maybe back to this range right here, possibly the recent highs before getting sold off into FOMC. So that's kind of where my general thesis is at right now. Obviously proven wrong on a break of 28K, which we would then target obviously 27.2, 27.3 to meet these equal lows. But I think it does make sense that, okay, everybody's looking at FOMC 25 basis points. Let's short today so that we can just walk away and have the easiest short of our life, right? Well, typically that's the wrong indication from the market, which could then rocket us back up to, 29.3, maybe 30K. And then we consolidate a little bit into FOMC before having, a quick dump and then recovery, or obviously just a dump. So I kind of mentioned this to you, CJ and Monty, earlier, and it kind of seems to agree with your theses to some degree, is that late shorters, will never be profitable forever, as we've seen in crypto. So do you guys kind of agree with this outlook, or do you think there's a little bit more downside to be had into, tomorrow and Wednesday before the FOMC? Specifically for Bitcoin, and let's, obviously, bring in Ethereum too. So let's not think we're all have our own opinions on most altcoins, but Bitcoin and Ethereum specifically.
I don't feel particularly great about it. I mean, I'm very bad at predicting like short-term price action or whatever price is going to do in the next 2 or 3 days. But like I said, I think the safer play over the next 2 months is short some of the BTC pairs. As for Bitcoin and ETH, it's interesting to see ETH BTC actually being a little bit resilient today, but it's very concerning that, Bitcoin and ETH can't rally despite the fact that, NASDAQ and ES were up earlier today. So it begs the question, like, yeah, those Asian indices that have been holding Bitcoin up, relatively speaking, what if they go down like 0.5% or 1%? Like Bitcoin's going to go down 5% to that. So I don't know, like longs here into anything don't really make sense from a risk reward perspective to me. But that's just basically kind of my outlook going into FOMC and what I've decided to do.
How about you, Monty?
See, for me, I think that the shorts are the riskier play than the longs. Not to say that I'd be going long here, but I think if you short this, if you short Bitcoin here, and heading into FOMC, with the Qs looking the way they are, and with the Eastern indices looking the way they are, even if we get a negative day in those Eastern indices, I still think it's all about how traders are positioned. And we saw it last night, or we saw it just in the last 24 hours. Too many traders went long because they saw the pre-market data. They saw that we were going to have a positive day in equities, and they got squeezed. And I think that that's a plausible scenario if you try and short into FOMC this week, is that essentially you get squeezed out. So I am not currently looking to go short or go long. Essentially, if I were forced to take on a position, I would wait one day, then go long into FOMC and hope that we get that short squeeze. I know hope isn't the best trading strategy, but from what we've seen in the past and from what we're seeing now from current trader positioning, I think a long trade is less risky than a short trade. That's just my opinion. But either way, right now, like I said, I'm still just sitting on my hands and kind of waiting this out a little bit.
And I completely agree. And I'm just obviously discussing it for academic purposes, and maybe on the off chance that I completely agree with CJ or Monty and then pipe a trade after this session. But no, I mean, it's obviously, FOMC week is one of the most difficult weeks to trade. Any major data point weeks, because like CJ and Monty said, everybody's trying to position going into it, and if you're positioned, then the data is available to somebody else in terms of where you took that position and how much and how large or small that position is. So therefore, it's vulnerable to a certain degree. So if you are positioning now, maybe you're not trading millions and millions, for a huntable position, but you're going to be wrapped up in those other positions which are obviously being hunted, and you could be hurt within that. So I would recommend to anybody who's not an expert or maybe intermediate trader to just hold off this week, or take the most obvious trade. Meaning, if we go down to 27.3 or 27.2 and then have a swing failure pattern where we get bought right back above 27.4, that's pretty much an obvious long. That's where your risk is clearly defined, because you'd set your stop down by the lows, you'd ride it out, whatever. But here, okay, so you're long, but you're going to set your stop at, just under 28K. Well, what if we get a swing failure pattern under 28K and then we go back up to 28.5, the VWAP, or maybe 28.7, where your trade's killed and you made no money and you only lost on the risk. So that risk isn't looking that good, because you obviously have these equal lows down here, which are easily grabbable if 28K does break too. So there's a million ways to try and approach this type of trade, which obviously you have no edge. You have no edge, just walk away, wait for the next type of trade. So, I think everybody can play it a little bit more safe here, and, maybe take, not even take a passive trade, just wait until FOMC data is obvious, or that meeting is had. But let's talk about FOMC meeting just for a second here. I know, neither of you are, predictionistas and, sit there and pound your chest with, how accurate you are in terms of these macro data points. But I think we can all agree that a 25 basis point hike is likely on Wednesday. So in your opinions, you feel that, is Wednesday going to be a bullish day? Is it just going to be a day with a bunch of volatility where price relatively remains the same once it's all washed over? Or do you guys feel that it's a bearish event? And personally, I'm feeling a little bit more bearish in reference to this FOMC, due to the fact that a lot of euphoria and positive narratives have been kind of brought to the table due to either 0 point basis hike or a topping of the federal funds rate, at this meeting or very soon in the future. So I think that a lot of people may be proven wrong. And that's why I think we're going to be a little bit more bearish than expected. But I'd love to hear your guys' thoughts, because clearly nobody is focused on anything else this week other than FOMC.
Yeah, obviously it's a big
It's a bit loaded. So, feel free to answer it with, a complete, I don't know, or, as much specificity as possible, but I figured, good conversation piece.
Yeah, I hate to do it to you, Nick, but I'm going to take a contrarian perspective to you here. And I'm going to, say that we could see some bullish price action immediately following FOMC. And here's why. Literally, this entire year, CJ and I have essentially been contrarian trading. We've been taking the opposite side of retail traders, and it's worked out tremendously. Traders have remained short, and the market has continued to melt up. And now, with what is potentially a negative catalyst being a 25 basis point rate hike, even more reason for these traders to be negative and have negative sentiment. But I still think this market can melt higher. I don't think the echo bubble, as it's been coined, is ready to pop just yet. I think it can be inflated just a bit more. 25 basis point rate hike. I think we do see some potentially immediately negative price action, but then we get that swing that you're talking about, and we get more positive price action. So it's all about positioning. I think too many traders are short headed into FOMC, and as a result, we could see some, very strong volatility upside following FOMC, and that's something that I would love to see.
CJ, your thoughts?
I have no idea. Generally, we've seen a lot of sometimes we'll see de-risking going into FOMC, like what we're seeing kind of now, and then, like Monty had said, like shorts being forced to cover, even if, once the number comes out and kind of like the catalyst is like digested by the market, so to speak. But there's actually if you look at the past, like 4 FOMCs, typically we have bearish price action in the days following. Of course, we've gone up to make new highs. And also the other thing that I've focused on a lot, aside from prioritizing like positioning, is what you had mentioned, federal funds rate, and seeing that come down or peak. I think that plays a pretty important part in the market, but then again, we'll see. So I think all of those things are very important to at least have on the radar. But as for like predicting this stuff, I don't know.
Yeah, just to give a little context for my general view. So if it's a 25 basis point hike, I think no matter what, the market's going to react with auto red candles. Like whether we like it or not, if a hike means, the next couple of minutes, maybe 5 to 10, 15 minutes is going to be bearish as those algos automatically react. But I think the grand question is, what is the guidance? What is Jerome Powell going to say? And what indication is that going to give to the market? So if he comes up and he's like, we hiked today, but we're debating, the Fed is, debating on whether or not to hike next meeting. Like he's obviously not going to give it to you that specifically, but he could say something that indicates, they're on the fence about a hike the next meeting, which means that, it's a 50-50 possibility. In that case, the market probably reacts pretty positively, because that's indication, it's better indication that, we're going to top the federal funds rate or whatever. He could also, on the other hand, say that they're not pleased with the progress of inflation, or they're not pleased with unemployment rate. It's not high enough, or maybe wage inflation is outstripping the deflation, general deflate. If, people are being paid too much month over month, is outpacing, how much prices are coming down month over month. So there's a million different kind of indications that he can give in terms of how the market will react, bullish or bearish, during his speech. But I think the main indication is, are they pleased with, economic progress, which he could say they're not pleased, and that would be bearish. And then are they expecting, further rate hike increases? Will there be maybe one more? Are they thinking about pausing? Do they think the terminal rate is going to hit in 2023 or 2024? Like, these key phrases are really going to be what the market, runs home with. So that's what I would be, we're not going to speak until Thursday. So I want to, mention that for everybody as well, that's kind of where the movements are going to come from in terms of momentum. But the last thing that we mentioned, and I know CJ and Monty, you guys wanted to talk about this in reference to the echo bubble and potential signals of continuation or lack thereof, is meme coin mania. I've been seeing meme coins on my feed more so than I was seeing in 2022 and 2021. And it seems like a lot of the market as well, we have a lot of new degens. I'm hearing people, saying meme coins are a new phenomenon, that, 2023 is the first, birth of meme coins. And I think we all know we've been trading them for years and years and years, but that's kind of the new phenomenon for new people, is they think it's a new thing. They think it's a new product. They dive in, they want to, get more money and gamble more. But the biggest one is Pepe with 500 million. And let me pull up the deck screener on that for you guys. But $500 million market cap for a meme coin. I mean, I can't, what the one to do this with Shiba, I think, right?
Yeah.
And so what do we think about this? Is this an indication that we're topping? We people will typically say Doge is the last one to pump, right? Meme coins are the last thing to pump. So I know we've kind of taken this contrarian perspective where, we're both on different sides of the fence here. But I think this is definitely worrying to anyone who's been in crypto for a while, because this will typically signal the proverbial top.
Most definitely.
Yeah, either one of you guys, feel free to take it over.
Yeah, I mean, that's definitely been the case for a lot of, these rallies that we've had. We've seen these stupid coins with very little fundamental value pump hard at the end of a bull market cycle. But, in this instance, you got to ask yourself, where's the money going to go? Where's the money going to go from here? There's clearly people that are going to make there's the one guy who turned 3,000 into 3 million or whatever. Lost a lot of it to slippage, but still great trade for him. Where is that money going to go? I think ultimately when you see those pumps, they typically go back into stable coins and then eventually get injected back into Bitcoin. But all I have to say about this is that it's proof that there's always going to be another pump. And you should not in your mind treat missing a pump the same as taking a loss. They are not at all the same. And some people do that. Some people see this chart and it'll cause them to FOMO in because they're like, oh man, I'm missing an opportunity. But there will always be another opportunity, whether it's Pepe coin, Sheep coin. Doesn't matter if it's freaking, it could be anything dumb as hell.
When Monty.
Yeah, Monty coin. Fuck it. Send it to the moon. It doesn't matter. All these things have no fundamentals. So really, what I take away from this is there will always be another opportunity. If you miss this one, it's okay. There will be another one. And look for the signs that kind of precede these moves. We did see some pretty decent volume in Pepe coin before this pump, back there from the 17th to the 21st. There was some pretty decent volume that came in that was indicative of a potential pump, and that's what we got. And it will eventually retrace. There's no doubt about it. But in the meantime, the traders are enjoying those profits, and you should ask yourself, where are those profits going to go? Joe says straight into another meme coin, and that's not wrong, right? That's a plausible answer. Straight into another meme coin play, and that just goes back to my point where there will always be another opportunity. So when you see this chart, don't kick yourself for missing it. Look at what signs could have been precursors to that price action, and then look for assets that are showing those signs and haven't pumped yet.
What do you think,
Yeah,
CJ?
I think it's just very concerning. But you did see these types of like chain reaction things, especially in the L1s, even after Bitcoin peaked in 2021 or 2022-ish. Like I remember very distinctly while Bitcoin was headed down towards like 50,000 to 40,000, we saw things like Phantom going up and making a double top. Its BTC pair went parabolic. Same thing with Near. So, these meme coins I see them kind of as the last hyper risk on rotation before, probability of a top. I'm not saying the top is in. I don't know if it's in, but I think it's like probably 50-50 now.
Yeah, I think if you're seriously gambling on a $500 million market cap meme coin 2 days before FOMC, I don't want to disrespect anybody, but I would recommend you take a hard look in the mirror if that's your decision. But hey, if you can make money, fortunately with Pepe is that the perpetuals are available now, so you can short it as well as long it. Because most of the time when you see a meme coin pumping, there is no opportunity to short it. There's only market buy and get slipped 10%. So at least there are opportunities to counter trade the trend, which can be dangerous as well. So I would just recommend. And I've tried trading this myself, and I will admit, it's so volatile that you don't feel comfortable in swings. Like nobody on Saturday except the absolute degens were like, this thing's going to 3x. Nobody could say that with any serious confidence. So I've been trading a little bit, not with too much luck, but just I actually did look at myself in the mirror today and say, do you want to keep trading Pepe or do you want to actually trade the coins that you have an edge on? And so I was like, keep the coins that you have an edge on, don't trade this crap. So I do though agree with both CJ and Monty on the opinion that this is typically a signal that green candles are not going to be entirely abundant in the near future. So I'll leave it at that perspective. So we are pretty much a full session in. So, we don't normally do this, but the chat has been active. So if there are any coins or anything that you want us to take a look at, we've got about, 3-4 minutes to check a few coins if you guys would like. Otherwise, we are going to go ahead and get ready for the FOMC meeting. And I think me and Monty will be a little bit counter positioned. I think CJ's trades more equities than crypto these days, and I'm mainly crypto more so than equities. But I think actually, it's going to be a relatively fun trading week, in my opinion. So I think the last couple of weeks, and CJ, Monty, tell me if I'm wrong, in your opinion, was a bit of a slog. We just got hit with ugly news, a lot of gross volatility. I think now we have something where we understand what is likely to come, and therefore we can react. Because with PCE and CPI, it was like we got no clue if this is going to break up or break lower, or be a beat or a miss, probably a better way to say it. But with FOMC, we're pretty confident, going to get a 25 basis point hike, and we know what to listen for in terms of Jerome Powell's conversation on Wednesday. So you guys feeling confident this week, or you guys thinking it's better just take the week off and come back on Thursday?
I mean, look, I have like positions I plan to hold and not really do too much to unless my specific levels are hit. But like this time of year is not a good time of year to trade in general, like especially the first couple of weeks of May. Just you get caught up in chop. There's really not a lot of volume. I was looking at seasonality in the DXY. May is the second best performing month for the dollar, led by January. So we could see the DXY react to that. But overall, like I said, May, it's just not a great time to trade. But this week's volatility should be, create some mild opportunities. We'll see what happens.
They do say sell in May and walk away. And the market, if enough people have the same information, it tends to be a self-fulfilling prophecy. So I can't speak for an entire 31 days of price action, but it is important to consider that. So we did just have our friend Keith in chat request render. So we're going to end the show checking out render.
Oh, yeah, you
I'll
can
go
throw
ahead and pull the chart up really quick. Or Monty, were you pulling the chart up, Monty? Or
Yeah, I got it up already. If you want to
okay,
just
go
throw
ahead,
one.
Go ahead then, Monty.
So yeah, this has been a really interesting asset. We've been watching it. It's been running since the beginning of the year, not unlike many of the other altcoins. But the one thing that I want to point out here with Render and its price action in 2023 is how it reminds me very much of Bitcoin making a top at like 69K, because look at how here we had such strong volume, and then here we have much less volume. So we have that negative divergence in volume where we have volume decreasing yet price increasing. That's when you enter the realm of pure speculation and not, necessarily value-based trading. And that seems to be what's happening with Render today, getting hit over the head really hard with negative price action, actually down, one of the few assets down more than Bitcoin. And what I would also note is the increase in bearish volume here. This to me is discouraging if you're looking at this from a long perspective. From a short perspective, I think that this has a lot of opportunity. I would target the 1.8 level right around this smooth moving average. By the time it gets there, it'll probably be around 1.85 or so. So maybe look to short this. And like CJ says, if you use the BTC pair, it'll really kind of smooth things out a bit. But ultimately, you have an increase in selling volume, still 5 hours left in today's candle. I think we see continuation to the downside and ultimately kind of come back to where we were back here in February when we were coming down from the most volume this asset had ever seen. And, we're kind of consolidating briefly. I think we do ultimately retrace and head back down to those levels. Another coin that, is pumping and falling hard, but really for me, from a technical perspective, this one is looking nice for a short play.
I'm opening a short in Wonder. I like that.
Okay. there we go. CJ.
I'm not gonna lie, I'm also attracted to a short and Render. I'm just gonna go ahead and pull up I'm seeing a lot of what Monty's seeing. So I just built what I just considered to be the range. And so you're pretty much your last hope is a bounce at what is that 215, 214. If you don't bounce there, then you're pretty much deviating back in here. And this is just one giant deviation. Anytime you see that, it's pretty much typically, it's not, a 10 times out of 10, but typically you see that kind of deviation and price just does something like this. And down.
Yeah, look what it did back in February.
Probably that's
something very, very similar.
It's typically what happens. And that's a pretty steep deviation. And this was tiny. This is pretty serious.
Yeah. So, I expect that same sort of price action that we saw from that first high. That green line you drew, Nick, I think that's a very likely scenario. However, last thing I'll say before passing it back is just be cautious with the amount of leverage you use on this one. I think there will be some squeezes in the interim on any day that Bitcoin has positive price action. So I would not use any more than like 2 to 3x leverage on this trade.
Also, just look at let's just zoom into these daily candles. There was not a safe day in a short unless you were several days out from shorting the top, because this went down. Okay, then it accumulates half your short back. Okay, down to even lows. Oh, give half your short back. Goes down. Okay, now we're back up into the range. So it's going to be a tricky short, and it's going to test your patience, which is why so if you didn't short up here, obviously we're taking on the risk a little bit more so. But I think the clearest short is a break of the 314 level or 214. I'm sorry. If you actually confirm back into 214, then you're pretty much like it's very likely that we at least head to 1.6, potentially all the way down to 115. So if you are wanting to be a little bit more careful heading into FOMC, then a break of 214 would be the auto trigger, which is where I would probably add more.
Yeah, and if I may, before we wrap up here, just to be very, very specific, and Monty touched on this when he was talking about the leverage amounts. Like, risk control is the most important thing when approaching these shorts. I just took like half of a position just now in render, but I'll probably add the other half either tonight if we have bullish price action in Asia, and then potentially depending on what happens Wednesday after FOMC. But the stop loss and the invalidation is very clear if you go above, what is that, like 240 to 260? If you continue making new highs, there's no reason to be holding a short. But like that bearish engulfing candle, clearly defined risk, not a lot of negative funding. So this one checks all the boxes, so to speak.
Yep. So, all righty. Well, thank you, Keith, for suggesting that coin. It's definitely a hot one on the market that many are trading. So I'm sure there are many who watch the show who are interested in that trade. So, but that is the full session for us. We are over a full hour today. So definitely making up for the lost time last Thursday, but we will see you guys again on Thursday. Alex will be joining us. He is coming back from a wedding with one of our business partners. So very glad to have him back. And obviously we'll talk to you on Thursday after FOMC. So we'll break down, what Jerome Powell said, what the rate hike was, obviously, and then what the indication is moving forward, because we know after FOMC generally volatility will continue and get some good trades out of it. So we will see everybody on Thursday. And one thing I forgot to do that Alex is the best at is if you want to sign up for Trade the Chain, head to www.tradethechain.com. And CJ and Monty, please let us know where we can find the good friends at Market Rebellion.
You can find us over at marketrebellion.com/try crypto. CJ and I run a 24/7 service over there where we got a charting system chat. We publish actionable trading sites with entries, exits, and stop losses. So feel free to stop by, talk with us there. We'd be happy to chat with you, but that's all we got.
Cool. All righty, guys. Have a good one. See everybody on Thursday.
Take care.